Hello everyone, welcome back to my channel. So this video marks the end of the week number 86 in this road to 100k realized return challenge, and another week, another uh, downhill trend that continued over the course of this week. It has been the fourth week in a row this has occurred, as the events in the Middle East continue to take place, and yeah, there are no signs of the conflict coming to an end. And this, of course, is pretty much burdening the market sentiment. And even on the economic front, as we'll get to see right now, things have not improved by the least bit. And I'm not going to spend too much time here on some of the lesser information or economic readings that came about. Let's just go straight into one of the main ones, which is the PPI. And the PPI was indeed another nail in the coffin of the investors' confidence, because it came a lot hotter than it was expected. As you can see here, both for the headline month by month and year over year, it came quite a bit above the expectations, and even higher than the previous reading in the previous month. And so you see here, and yeah, month on month, 0.7%. This is really significant, and annually 3.4%. Keep in mind that two things. First of all, this is a producer price index, so this acceleration in the price increases is very likely that will be reflected downstream, and by downstream I mean to the consumer price index. So American consumers may expect that their prices are going to continue to rise further, and not only that, this reading was a reading from February, all right, and so given the fact that the war or the events in the Middle East broke out on February 28th, this reading does not account for the increase in energy prices that resulted as or has been resulting from this event. And so I would expect that the next readings or the next reading of the PPI will continue to come equally as hot, if not even hotter. Uh, Now, another interesting point, and looking here, um, I've been looking at the release of the BLS of the PPI, and apparently most of the increase, as you can see here, was actually in the goods rather than the services. Now, this may be correlated with the tariffs, because tariffs are imposed on goods, not on services, and so chances are that some of this increase may be due to the tariffs. But of course, we don't have access to all the information. But yes, if that is the case, yeah, the tariffs are clearly playing a role in this. Um, but again, expect further bad news down the line, because of course the geopolitical tensions that are going on in the Middle East. Now, the next one, which is basically a byproduct of what this reading really means, is the Fed decision. Now, as expected, the interest rates remain the same. However, and given the guidance that Fed Chairman Jerome Powell gave, which I believe that was quite quite benign, I should say. It was not really putting the finger in the wounds, because it says that economic growth has been solid. I think it's been anything but, especially in the last quarter with 0.7% annualized. and the fact that there is just uncertainty associated with the Iran war. But again, this means that investors, given this situation, are now not even expecting one interest rate cut for the entirety of the year, which may not be that significant given that the current Fed chairman is on the way out and will be replaced by the May meeting, if my memory serves me right. Even so, and looking here at the Fed funds futures, this is the Fed Fund futures for the next meeting on April 29th. And you see here that even though the investors still are expecting with near certainty that an interest rate cut or increase will not come, and so interest rates remain the same, there are already some bets on an interest rate increase of 6.2%. Now, probably investors are paying too much attention to one side of the mandate, which is the inflation side, and not paying too much attention to the other side of the Fed's mandate, which is maximum employment. And given the fact that currently the U.S. economy is shedding jobs, and the only job growth that has been happening is mostly in the healthcare service. I don't think that it's a wise move to increase interest rates, because it will further strangle the economy, and probably even by increasing interest rates, given the source of the inflation of the inflation increases that we have been seeing. I don't think that interest rates can do much about it, because interest rates will further decrease consumption, but this is a problem with supply of energy and with the supply of goods and services. So, and in terms of goods, because of all the tariffs which are being leveled at important goods. So, I don't think that this is too much of a good idea. But yeah, it is. This is just an opinion. Now, the way things happened, and yeah, apparently there is no more interest rate cuts in the horizon. The next pieces of information are really not that important. This initial jobs claims, which even came slightly below the expectations. Yeah, this is basically was an afterthought. Nobody really paid attention to this. What really was on the radar for investors is that the Russell 2000 entered into correction territory. The Nasdaq also got briefly into correction territory, which is basically 10% below the all-time highs or the recent high, but it recovered in post-trading. And IWM did as well, because it touched briefly around the 242 mark, but in the after hours it recovered slightly and jumped out of correction territory. Now, when it comes to the trades that we actually did, we trade quite a bit more than usual, and this is where we stand. This is the take or the profit that we took over the course of this week. It increased a bit, or so relative to the last few weeks. So we collected just a little bit over 729 euros. However, as you can see, we were assigned more shares of the junior silver miners. And so we bought 300 more shares at $29 each, at 300 more shares at $29 each, and we bought 500 more shares at 27. And now, because we already had bought 100 shares at 36, our current average price is 28.6067 per share, so this will allow us to now start to sell calls on the junior miners at 29 with the 29 strike price, and still be able to pocket a very slight profit, which I believe it will be around $300. But when it comes to the trades themselves, and this is a pretty long list, we have already touched upon these trades which we showed on Monday. Now keep in mind that we did not trade at the time the Qs or the IWM, because the premiums were very much meaningless, and I do not want to sell with a longer maturity, because I was expecting that the market may recover a bit somewhat, but that never happened. Now what we started to do is to basically sell more puts on the junior miners, and this is basically what we did. And we sold these puts on the 29, and we even bought back the put that we have sold on ARKK. We bought back at 4 cents. We still managed to get, I would say, not that much of a return out of buying back this put, but because it was already close to being meaningless, as the RKK recovered a bit somewhat on Wednesday, we just decided to buy it back and deploy the money on the junior miners to capitalize on the fact that it was falling quite a bit, and this would allow us to lower our cost basis. So basically that's what you did. We sold 2 more puts, and actually here we sold 5 of them. We received this premium, which was $65 here. But then again, as you recall, we had our NVIDIA call that we sold expiring on Wednesday, which was the day that the Fed was making his decision public on interest rates. Now, even though I could have at the time, and keep in mind of the time that we did this, it was 5:21 p.m. We could have let this one expire, because whatever happened, the option will die, and we will have to create a new position on Thursday. However, I was not optimistic, given the events that are going on. I was not optimistic about the potential signaling that more interest rate cuts would come, and because of that I decided, all right, let's bought this one back at 10 cents. It's not the minimum that we could get, but we bought it back at 10 cents, because if the feedback or the outlook of the Fed press conference is not coming good, is not a good one, the price will continue to fall further. And if we bought back now and sell a new call on NVIDIA shares expiring on Friday, at this point in time, the options still have in their premiums, they still reflect the uncertainty coming from the decision, because at this time the decision was not yet been made public. And so I decided to take the risk and bought back and roll over to Friday to collect some more premium. And given the actual decision that the Fed put out, it was ended up being a good decision, because then the stock continued to fall, but by that time we had already rolled over the position, and so we got more premium that we would have had if we would have let the option expire and then buy, or rather sell another one on Thursday. We, yeah, this is already on Thursday. We still sold some more puts, but on the junior miners. But again, because the stock continued to come down, we sold these ones at 20 with a 25 strike price. We collected some more premium out of this, and here you see that we were still going quite conservatively on these calls. This was not that much, 83%. This was 83%, which was not that conservative. But the reason I chose this particular delta or probability of profit was because the other ones at the lower strike price, 24 and 23, the stock, there were no options available to be sold because these options are not that liquid, and so I had to settle for a slightly higher one, and it ended up being good because the stock never reached 25, so we got more premium that we would have had otherwise. But still, that was the reason why. But you see here that the other ones, the options that were actually exercised, we went quite conservatively. But yeah, basically the stock just kept tumbling down over the week. Here you can see the chart. This is the weekly chart, and you see here it was bump after bump gapping down, and yeah, this is why basically we were assigned on options that had a probability of profit, meaning not getting exercise, of over 90%. But of course this tells also something about the volatility of the stock, which is normal. But it ended up not being that bad because now we will be able to sell our options, and we're gonna sell 9 of them with a strike price of 29. Here you can see we can even go 28 and a half and potentially locking in a small loss, capital loss, which is already been offset by the premiums, but we are going to stick to the one that we are really looking for, which is the 29. So not much of a problem with that. Going back to the trades, and by Thursday it was pretty clear that we are in for a long one, and the stocks are not coming back anytime soon, or at least that is my expectation. And so that's why I felt, all right, it's better for us to get some premium out of these Qs shares and IWM shares, even if we have to take a longer maturity, and as a consequence of that, a very small return. And so I decided to go ahead and sell calls for 2 weeks, and we did not get much premium out of this, as you see here. But yeah, this is better than nothing. It's still the strike price, it's still at our cost basis, so whatever happens, we are happy, we win the trade. But then we also, because of the premiums we have been collected, we also sold more puts on the 24th strike price on the junior miners. Now you see here 24, and we still managed to collect this premium on the same day that the options would expire. Exactly only 1 week after expiration. We are getting very low into the price, and we still managed to collect this premium, which is quite significant. That tells a lot about what was going on in terms of the price. The price was really tumbling down. But then again, as I mentioned, we bought 300 shares at 29, 500 shares at 27, and I can even show you because the calculations in the Excel are not that clear. But basically, because we already bought 100 shares at 36, and plus we bought at 29, we bought 300, plus we bought at 27 we bought 5, all right, and now we are going to divide by the 9, which is 900 shares, and this gives us the cost basis of 28.66. So 29 strike price is our target to sell calls next week. And here, yeah, besides all that, the 25 puts expire worthless, the calls on Nvidia expire worthless, of course, the 36 call on the junior miners as well, and the ARKK calls that we had also expire worthless. Now, for next week, I think it's pretty obvious, and given the fact that the Nvidia as well continue to come down by a lot, you see here, especially the gap after the Fed decision and the PPI. Actually, the PPI was here, but I think this was mostly because of the Fed decision. Now, given the situation, it's clearly the case that we are not going to sell more calls on Nvidia at 185. We are going just to settle for our cost basis, which is at 180. And even so, given that we are not looking at any particular data, important data coming the next week, US productivity, flash services, flash manufacturing for March, import price index. There's a lot of Fed speak over here on Thursday, so there is basically nothing that will bring us that will bring our attention to the market. So it's going to be another week very much focused on what's going on between the US, Israel, and Iran. And because of that, we are going most likely to either sell at 180 expiring on Wednesday, and if we do this, we will bet that the stock will recover a bit more in the meantime, so that we can then sell for Friday at a slightly higher premium. But and looking here at this data, either receiving for 3 days, 3-day trading sessions at 10 cents, or with 5 sessions at 54. I think the choice is clear that we would use this one. But these are the premiums that were going on Friday at the end of the session, so this will be certainly different, but for sure we will be using the 180 strike price for this. For the Qs and IWM, it's pretty clear that we can't do anything for the time being. ARKK still, we are going to sell the 75.5, which is our cost basis, so there's no secret. So in here we are a bit far away, but we'll see. And for the junior miners, which is the last one remaining, yes, now it's going to be the 29 strike price. Now, there are no earnings coming out for next week, so this is also something that we don't have to worry about. Now, in terms of the buying power that we have left, we will see what we will going to do, given the money that we have. So 5252 times, I think the US dollar is about 116 at this point, but we are going to play it conservative, so it's about 6,000. So it's not enough for us to sell a put on ARKK with around 63 strike price, so we'll probably have to use this money to sell either some more puts on the junior miners, something like that. But yeah, we'll see what we are going to do. It's going to be interesting to see how the markets will be opening on Monday. But yeah, that's all for the next week. For the time being, this is all one. By the way, one thing here, this sign over here, this is just a notice that we are going to receive dividends but given the fact that this option has such is so much out of the money, it's just saying that it's not likely to be assigned early, so the call buyers will not for sure exercise this call just to receive the dividends, and for good reason, because with the stock quoted at 587, they are not going to buy these shares at 630. It would not make any sense whatsoever. But yeah, now this is pretty much it. So feel free to leave your comments in the comment section down below. I am also available on LinkedIn in case you need to ask me any questions. And as always, feel free to like the video and subscribe to the channel. And we will reconvene either on Monday morning or on Tuesday evening to start the week number 87 of this challenge. And yeah, I'll see you there.